Hi lads, this is the 2018 depreciation of fixed assets question. It's question 2 in 2018, should take you about 25 minutes in the exam. So I'm going to look at the question, then I'm going to do a table of workings, then we're going to do the T accounts for the question. So first thing we have to do, have a good read of the question and highlight some things. So first of all, 15% of cost per annum is the depreciation rate, and that would be on a straight line basis because it doesn't mention otherwise, from the date of purchase to the date of disposal. On the 1st of the 1st 2016, O'Brien Transport owned the following vehicles. So number 1, purchased in 2012 for 50 grand. Number 2, purchased on the 1st of the 3rd 13 for 66,000. Number 3, purchased on 1st of the 10th 2014 for 74,000. Then more information. On the 1st of the 4th 2016, vehicle number 3 was crashed and traded in against a new vehicle costing 86,000. That will be vehicle number 4. The company received compensation and they paid for the new vehicle a certain amount. On the 31st of the 7th 2017, vehicle number 1 was traded in against a new vehicle costing 90,000. So that vehicle is going to be vehicle number 5. Now this is very common as well. Vehicle number 1 had a refrigeration unit fitted on the 1st of the 3rd 2013, and this cost 22,000. This is to be depreciated at 30% for the first 2 years and 15% thereafter. So the way we're going to lay out the table, we're going to have vehicle number 1, refrigeration unit 2 and 3, because these were all bought prior to 2016. Then we're going to have 4 and 5. We are asked to do the vehicles account, the depreciation account, the disposal account, and a bit of theory. So we're going to do that, but first we're going to do a table of workings. I've filled part of it in so far. I've filled in the purchased on column and the disposed on column, and I've also filled in the cost column. Now, the ones we owned prior to 2016, so the first 3 plus the refrigeration unit, we can add these up. Okay, so we can add these up. Just delete that. So the sum of these will be our opening vehicles account when we get to the T accounts, and I'll mark it in red there. So it's 212,000. Okay, annual depreciation. If we go back to the question, the annual depreciation is 15% of cost per annum, apart from the refrigeration unit, which is slightly different. It's 30% for the first 2 years and 15% thereafter. So I'm just going to work out what the annual depreciation would be. In this case, 50,000 times 15% would be 7,500. The refrigeration unit for the first 2 years is 30%, which is 6,600, and then it reverts to 15%, which is 3,300 thereafter. 15% for vehicle 2 is 9,900. For vehicle 3 it's 11,100. For vehicle 4 it's 12,900, and for vehicle 5 it's 13,500. These figures are all 15% of cost. So now, after I've done those first 4 columns, I'll deal with each vehicle individually and the refrigeration unit. So vehicle number 1, purchased the 1st of January 2012, disposed on 2017 end of July. So bought on the 1st of the 1st 2012. So in 2012, a full year's depreciation. Same in 2013, same in 2014, same in 2015. So by the 1st of the 1st 2016, we have 4 full years depreciation. So that would be €30,000. depreciation in 2016 is a full year. Again, there is no disposal in 2016, so the accumulated depreciation by the beginning of 2017 is accumulated 2016 plus depreciation in 2016. We dispose of this vehicle in 2017 after 7 months, so depreciation would be the full year's depreciation divided by 12 multiplied by 7, which gives me 4375. So the disposal figure will be the accumulated depreciation plus the year's depreciation, 41875. Refrigeration unit. So we dispose of the refrigeration unit with vehicle 1. So that was bought on the 1st of the 1st 2013. So 2012 we didn't have it. 2013 we had it for a full year. Remember, the first 2 years 6,600, so that's year 1. 2014 6,600, 2015 3,300, which will give you an accumulated depreciation of these three numbers added together, 16,500. We had it for the whole of 2016, so that's another 3,300. There was no disposal in 2016, so accumulated depreciation for 17 is the 16 figures added together, gives us 19,800. We disposed of this refrigeration unit in 2017 after 7 months, so again 3,300 divided by 12 multiplied by 7 would give me 7 months depreciation, and the disposal figure is the two depreciations added together, 21,725. That's that dealt with. Vehicle number 2, bought on the 1st of the 3rd 2013, and we still have it, so it wasn't disposed of. So 2012 didn't have it. 2013 it was bought on the 1st of March, so we had it for 10 months. So full year's depreciation divided by 12 multiplied by 10, 8250. 2014 full year's depreciation. 2015 full year's depreciation. Accumulated depreciation, therefore we add up the three numbers, gives us 28,050. Depreciation for 2016 full year, no disposal. So accumulated depreciation 2017, add two numbers, full year's depreciation in 2017 because we haven't got rid of it, and no disposal in 2017. Vehicle number 3 was bought on the 1st of the 10th 2014, disposed of on the 1st of the 4th 2016. So 2012 didn't have it, 2013 didn't have it. It was bought on the 1st of the 10th 2014. So in 2014 we had it for October, November, December, 3 months. So full year's depreciation divided by 12 multiplied by 3, 2775. We had it the whole of 2015. So full year's depreciation. On the 1st of the 1st 2016, the accumulated depreciation was these two added together, 13875, and we disposed of this vehicle on the 1st of April 2016. So that would be a full year's depreciation divided by 12 multiplied by 3, 2775. The disposal figure therefore is accumulated depreciation plus the 3 months depreciation, 16650. That vehicle is now gone, so nothing else for that vehicle. Now we go down to vehicle number 4. Now vehicle 4 and vehicle 5 were bought after 2016, so all of these columns are going to be 0. Okay, so it was bought on the 1st of the 4th 2016, so for 2016 our depreciation would be a full year's depreciation divided by 12 multiplied by 9 months. 9675. No disposal. Accumulated depreciation, all we have is the 9675, and the depreciation for 2017 would be a full year 12900, and we didn't dispose of it. Similarly, vehicle number 5 wasn't bought until the end of July 2017, so we have nothing all the way along. Nothing in 2016, nothing in 2016, nothing at the beginning of 2017. During 2017, we would have a full year's disposal divided by 12, multiplied by, we bought the vehicle at the end of July, so 5 months we had the vehicle, 5625, and no disposal. Okay, that's all the figures we need. We'll just add up some columns. So, first of all, the first of the first 2016 column. We're going to add that column up. And this figure here will be our opening balance for accumulated depreciation, 88,425. Our depreciation for 2016 then. This total figure will be our depreciation for 2016 in the depreciation account, 33,150. In the disposal account, this figure here will be the depreciation figure in 2016. The accumulated depreciation at the beginning of 2017 will be this figure here, 104,925. The depreciation for 2017 will be this figure here, and you'll see this figure here is worth a lot of marks. I'll show you in a second, 34725. And then the depreciation on disposal of vehicle 1 and the refrigeration unit is as so. So we have marked in red 1, 2, 3, 4, 5, 6, 7 figures, which are going to become very important as we go to the T accounts. So I will just flick to the T accounts. So we have a vehicles account, a depreciation account, and a disposal account, which were asked for in the question. Here's the question: vehicles account, depreciation account, disposal account for 2016 and 2017. So I've already put in some dates just to speed things up, but as you go through the question you will find these dates. I'll point them out. So first thing you would do is the opening balance from vehicles and the opening balance for depreciation. So this is on the 1st of the 1st 2016. So the opening balance for vehicles we have worked out is this figure here. I will just highlight it in red. The 212,000. Okay, so opening balance 212,000. The opening balance for depreciation is this figure here, 88,425. 88,425. So now what we're going to do, we're going to go through the first disposal. So the first disposal from the question, we're looking for anything that happened in 2016. So if we look at the question, on the 1st of the 4th 2016, vehicle number 3 was crashed and traded in against a new vehicle costing 86,000. The company received compensation to the value of 43,000, and the cheque paid for the new vehicle was 65,000. So let's go ahead and fill those details in. So first of all, in the vehicles account we will have disposal of that, disposal of vehicle number 3. So vehicle number 3 cost 74,000. So a disposal of 74,000. Remember the double entry. If we credit the vehicles account, we will debit the disposal account. So let's call it vehicle 3. 74,000. Okay, that's the first thing we do. Also, at that time, in the vehicles account, so we disposed of one that cost 74. We also bought one which was which would have been, where is it, vehicle number 4 for 86,000. So vehicle 4, 86,000. Okay, what else happened on the 1st of the 4th? We'll go to the disposal account and the depreciation account. So when you dispose of a vehicle, you must also dispose of its depreciation. So on the left debit side of the depreciation account, I'm going to call it disposal, and I'm going to go back to here, and I'm going to look for disposal in 2016. Here's the figure I'm going to use, 16,650. So it's going to be the debit side of depreciation, 16,650. 16,650. So I've debited depreciation. I'm going to credit the disposal account, and we'll call it depreciation 16,650. Okay, what other information do we have about that trade-in? We are told the company received compensation and the cheque paid for the new vehicle was 65,000. Okay, so we are told the company received compensation of 43,000 and the cheque paid for the new vehicle was 65,000. So let's have a look here. So first of all, we will do the compensation. Which was 21,000, and then we will work out, there must have been a trade-in. There must have been a trade-in. So 60, what's it telling us here? Trade-in. Company, the cheque paid for the new vehicle was 65,000. So the cheque paid was 65,000. The new vehicle cost 86, so the difference between those two, the difference between 86 and 65 is 21, so there must have been a trade-in allowance of, the compensation should have been 43,000, the trade-in 21,000. Okay, now what we have to do is we have to balance this off. So to balance an account, you would add up both sides. So if I add up and see which side is bigger, if I add up both sides, the debit side is bigger. So that number is going to go on both sides. And with a disposal account, I'm going to put the balance above the small side. I'm going to call it P and L. In this case, we don't bring it down with a disposal account. 6650 is my figure. So what would happen here would be we basically made a profit on this deal of 6,650 euro. So that's the disposal account dealt with for 2016. We go back up here now. We can balance the vehicles account. We do the same thing. We're looking to find the balance here to bring down. So you add up both sides. Clearly the debit side is bigger. It adds up to 298,000. And it adds up to 298,000. So our balance is the difference between the two here, 224,000. That 224,000 is our opening balance for 2017. Okay, so when we're dealing with 2017, that's our starting point. Now we will do the same for depreciation. Now this figure over here is our depreciation for 2016. Go back to our workings. This figure right here is our depreciation for 2016, 33,150. So that would go there, 33,150. Now again, we're going to balance this account, so add up both sides and put the big number on both sides. Clearly this is the big side, so adds up to 121,575. 121,575. So the balance, closing balance for 2016 would be 104,925, and that would be the opening balance for 2017, 104,925. And of course we know this because if we look at our workings, our opening balance for 2017 we worked out already, 104,925. So we'll keep going and we will do the disposal of what was disposed of in 2017, which was vehicle number 1 was traded in against a new vehicle costing 90,000. Also the refrigeration unit was disposed of as well in that transaction. So vehicle number 1 cost 50, the refrigeration unit cost 22, that's 72 in total. So we go to 2017, we credit the vehicles account by 72,000, so call it disposal 72,000. If we credit vehicles, we must debit the disposal account. So down to 2017, we'll call it vehicle 1 and 72,000. When you dispose of anything, you must also dispose of its depreciation, so let's do that. So we'll call it disposal. We'll look at our workings. The depreciation on the disposal of the vehicle 1 and the refrigeration unit was 63,600. So 63,600 debited to depreciation, credited to disposal, and that's depreciation, we'll call that 63,600. We'll see, did we get a trade-in or compensation? There was a trade-in of 13,000, and that's all the information we're given. So a trade-in of 13,000. So what we can do now is we can balance this off, and again the big side is, if we add these up, we get this is the big side, so that number goes in both sides. So the balancing figure here, which we will call P and L, would be 4,600, which again would be a profit on disposal. So for both disposals they actually made a profit, which is quite unusual with these accounting questions. So that's the disposal account dealt with. We go back over to the vehicles account. So 72,000 was disposed of, traded in, for a new vehicle which cost 90. So let's go to the debit side of vehicles, and we will call it bank and vehicle 5. So vehicle 5 was bought for 90,000. So now we can balance the vehicles account, add up both sides. Clearly again this side is bigger, 314,000 it adds up to, 314,000. So the balance which would be carried down is 242,000. That's done. Vehicles done, disposal done. Let's now do the depreciation. So last thing we have to do, the profit and loss balance for the year for 2017. We go back to our workings. This is the figure right here, 34,725. So 34,725. Add up both sides and balance this off. So the big side is 139,650. 139,650. So our balancing figure is the difference between these two, which is 76,050, and that is our accounts done. So let's look at the marking scheme. So we have all this done. So you can see the marks here. For everything you've got there 2 marks, disposal 1 mark, the trade-in 1 mark, bank 1 mark, disposal 1 mark. So 2, 4, 6 marks in total. The depreciation is the big one. So you're looking 6 marks, we worked that out, the opening balance, we worked that out, and we worked that out. Then we worked that out, we worked that out, and we worked that out. So in total, you're looking at 19, 30. You're looking at 32 marks for that. And then the vehicles disposal, we have these I've just shown you: 2, 4, 6, 8, 10, 12, 14 marks there. So out of 60, 38, 48, 52 marks out of the 60 for those T accounts, which we have. Last bit of the question is the theory. The question being, explain what is meant by depreciation and distinguish between straight line and reducing balance method. 8 marks. Now you want to write a decent bit here. You don't need to write all of this, but you want to give a good explanation. So depreciation is a measure of loss in value of a fixed asset over its useful economic life as a result of wear and tear, passage of time, obsolescence and extraction. The amount allocated in each accounting period is treated as an expense to be set against revenue in the calculation of profit. That would be enough. Next, what is straight line and what is reducing balance? Let's look here. Straight line method is where the same amount of the cost of the asset is written off each year. Okay? It is appropriate in the case of an asset that remains in the business over a long period of time and loses value slowly. For example, such assets as buildings that generate profit over many years. The straight line method involves spreading the depreciable amount evenly over the estimated use of the life of the asset. It's the same figure each year. The reducing balance, however, applies a constant percentage to a gradually carrying amount balance. So basically what happens, every year you recalculate the depreciation. The amount written off is high in the early years and reduces each year. So this method is appropriate in the case of an asset which loses most of its value in the early years, like vehicles, computers and equipment. They depreciate very quickly in the early years. So you buy a brand new vehicle, you drive it out the showroom, it immediately depreciates quite a big amount. Okay. It should be noted that relatively few businesses use reducing balance. Okay, you don't need that bit though. Okay, so a good bit of writing for the theory. That's it. Hope that helps. Thanks.